I'm joined by Michael Linford, CFO at Affirm. Michael, so good to have you with me this morning. Why did it make more sense to shell out hundreds of millions of dollars to acquire Returnly rather than build out this technology in-house?
So we got to know Returnly back in their Series B. We were an investor in 2019 and have been watching the space pretty keenly. If you think about what's happened over the past year, you've seen real explosion and continuation of trends in e-commerce, and returns is a key pain point in all e-commerce transactions, as it is for all commerce transactions. Specifically, though, online returns are happen at a rate about 3 times what you'd expect in brick and mortar outlets, and in 2020, returns more than doubled with online purchases. So it's a real key pain point for merchants and consumers alike, especially as e-commerce continues to really change the way in which consumers
Michael, how does this make
acquire goods.
Michael, how does this make the return process easier for consumers?
We're so excited about this. So the core thing that Returnly does for consumers, it allows consumers to get store credit as soon as the item is shipped back. So if you think about a typical returns process, you spend a lot of time, you go out and buy an item that you're so excited to get, it gets to your house and it's the wrong size or the wrong color or doesn't quite work for you. You then put it in a box and you wait a couple of weeks for it to get back to the merchant before you get your credit, and then you go out and try to find the item that you really want. Returnly shortens all of that and allows you to make the purchase for the thing that you want while the item is back in transit to the merchant. And that creates a much better experience for the consumer.
Okay, so certainly a faster transaction speed, it sounds like, in terms of money that is hitting your bank account, which would be consistent. Obviously, with it sounds like your goal at Affirm. Your company also recently IPO'd this year, so it's a relatively new public company. I'm sure that you did feel very confident in making this deal, knowing that obviously the data is going to be out there to the general public now that you have to comply with these SEC requirements. In terms of when this is expected to impact your bottom line, are you going to see those results instantly?
So we disclose that we do expect the transaction to close this fiscal year, but we don't expect it to have a material impact anytime really soon. I mean, the company, while has achieved significant scale with 1,800 merchants and over 8 million consumers, we don't anticipate it having a material impact in our financials in the near term.
Michael, yeah, sorry. I lost the audio there for just a second. I had someone clipped into my ear. But anyway, we were showing a chart there. Hopefully we can pull it back up. We do see this company, your company, is worth several billion dollars, currently with a valuation of $17.6 billion. The stock is higher today. So it seems like investors do have confidence in this particular deal. In terms of what you're going to report to shareholders, just give us the state of play here, the state of the business, of course, as this reopen does get underway, and whether you expect that to be a boon for your e-commerce services.
Yeah, so I'll obviously not want to speak to any of our results. We did announce yesterday that our earnings call will happen in May, and we'll speak to the more current results then. But we are continuing to see the trend towards e-commerce benefiting us, and that's happening both during the pandemic and all the trends that we've talked a lot about, but also as the economy reopens, we think Affirm's really well positioned to take advantage of whether that's consumers going out and traveling. We like to talk a lot about the trends that you see around things like weddings that were all mostly deferred. All of these things will benefit us as the economy reopens. Consumers will, the concept of revenge spending and consumers getting out there into the economy more aggressively will benefit us. And we think we have a unique role to help merchants drive their results and grow in that environment.
Talk to me more about the recent deals with companies like Vrbo, VRBO, and American Airlines, and what those signal about your company's investments, not just in physical retail, but in experiences as well.
Yeah, before the pandemic, we were really excited because we think that travel is a great example of something that sets us apart from our competitors. Affirm is a lot more than just a single payment solution for low average order value fashion goods. High ticket prices, low ticket prices. We can do long duration and short duration. And Returnly, for example, highlights the fact that because we have a technology platform, we're able to do a lot more than even just buy now, pay later. So we think we can really help merchants drive results for their business and more than just conversion. And that's something unique about us and something our competitors really can't catch up to. And we think that the acquisition of Returnly continues to differentiate us against what our competitors are doing.
What is the data that you see, Michael, just in terms of consumer behavior? Because I think that's the big question we have, and we've been covering it throughout this show. Yes, the momentum is behind the reopen. We see the economic data start to improve, but we do know that there is some vaccine hesitancy, and very soon we're going to have more supply than there is demand for this. Questions about how that does impact the recovery. What does the data tell you about the current state of the consumer and the economy?
So the consumer's in good shape right now. We see very healthy consumer both demand, so things that they're looking to go buy, and stable credit performance. And so it's not surprising, if you look at all the macro indicators, the consumer is actually in good shape. Now, we think the macro decisions by the government have helped an awful lot. And look, with respect to things like vaccine hesitancy and everything else, we're just focused on making sure that we help merchants be positioned to take advantage of the economy, no matter how consumers are choosing to engage. It's our job to meet the consumers where they are. So if a consumer is shopping online, like they have been significantly in the past 12 to 18 months, we're going to meet them there. And if they're in store, we're going to help them do that too.
Michael, so good to have you with me this morning. Congratulations on the deal. I hope you'll join me again. That's Michael Linford. He's a CFO at Affirm.